want to thank everyone for joining us. We've got pretty good interest in this sort of a program, and we're looking forward to providing some pretty valuable information here to folks as this may apply to them. I want to thank Carrie Hagerberg with the Montana Bankers Association, who kind of worked with us to lead this effort and pulling this webinar together. We've also been joined by the Montana Retailers and Restaurant Association. I think that there's probably some of their members that might see some real value in this program, and Stu Doggett with the Montana Lodging and Hospitality Association. And so for our primary partners in putting this together to provide this sort of information. One more quick little reminder, if you're not on mute, hit that lower left-hand corner mute button where the microphone is and click yourself.
Okay, Maria, I'm sorry.
And only I like, and Casey, okay, too. I don't know, maybe I know Nancy.
Kimberly, can you mute everybody?
Try call Casey.
Okay.
Todd, you're
there. How's that? So the way we'll do this is I'll introduce Dan Villa, and if you have questions as we go through the program, I'll have you type the questions down in the chat box, and then I'll ask Dan questions as we get towards the end of the presentation here. So with that, I'd like to introduce Dan Villa. Dan's the Executive Director of the Montana Board of Investments. The board is responsible for nearly $22 billion in state, school, and university assets, including those of the state workers' compensation system. The board also manages the state of Montana's lending arm through the in-state loan program and municipal finance program, also known as Intercap. Dan is a former state director for Governors Bullock and Schweitzer, and as well as a three-term state legislator. He lives in Butte with his two children. Dan, thank you for setting aside time from your schedule to walk us through this sort of information. So I'll hand it over to you, Dan.
all right, Todd, thank you. Good morning, everyone. I'll just jump right into it. I know your time is valuable. So what the Loan Deferment Program is an allocation from the state's CARES Act coronavirus relief funds made available through the federal government. We have $125 million available for this program. It is the largest single allocation from the CARES Act federal dollars in the state of Montana. And what the Loan Deferment Program does is work with your banks and our partner banks to get your principal and interest payments deferred for up to a year, between 6 and 12 months. The way the program works is you, as businesses, work with your lender. Your lender submits an application on your behalf to the Board of Investments. We then verify all of the eligibility criteria are met, and we fund in rounds, basically every 2 weeks on a Tuesday, so that you no longer have to make a principal or interest payment on your commercial loans. I'll walk through the eligibility criteria and then walk through some examples of what the program has done for Montana businesses so far. So first, clearly, you have to be a Montana business with a physical presence, be no more than 30 days past due on your note as of December 31, 2019. And the reason for that is under the Federal CARES Act, that's a date that has been established for banks in order to avoid putting some of their assets into a distressed status with the FDIC and their regulators. Been current on all other state financial obligations. This includes income tax, property tax, payroll tax, work comp, child support, as of March 12th, 2020. That is the date that the governor declared the emergency. I'll come back to this item in a moment. You have to be in good standing with the Montana Secretary of State and have no reasonable access to 12 months of working capital from any other resources. So what does that mean? It means that we're not going to be looking at businesses to be liquidating assets. We're not going to be looking to businesses to sell long-term investments or take significant draws on the equity that they've built. But what we want to make sure is that the resources and the financing goes to those who most need it, and to those who may have access to capital markets or other funding mechanisms wouldn't be in the program. Your participation in other CARES Act programs does not count against your eligibility for the loan deferment program. So if you've received a PPP loan, or you've received a PPP grant, or you've received an EIDL grant, you are still eligible for the loan deferment program. This program was really developed to complement those. PPP, as you all know, was designed more around payroll. This is trying to address the other needs that businesses have, particularly with working capital and your debt structures with your banks. The maximum amount that you're eligible for under the program is $150,000 per loan. And each entity, we have a maximum of $300,000. So if you have multiple loans to an entity, you can receive up to $300,000. The proceeds must be used to pay interest and deferred principal and interest payments for commercial loans. This is not for consumer loans or ag loans or residential loans. It's for commercial loans only. Lines of credit are eligible. The draw is up to June 17th, which is the date the program came into existence, are eligible to be put into the deferment program. The payments can be deferred for no less than 6 months and no more than 12. The logic there is we don't know what's coming next, so we want to make sure that we get at least 6 months under our belt. But for many industries, particularly in the hospitality space, 12 months is probably going to be necessary. We do have limitations from the federal government that any unspent funds by December 31 of this year has to go back to the Treasury. So we want to make sure that we get the dollars out the door and the benefit in place for Montana businesses as soon as possible. So working with the banks, we pre-fund the entirety of the payments. So it's not a monthly disbursement or a complicated long list of transactions as additional businesses qualify. We lump sum the funds for each individual loan to the banks up front. The maximum that we can cover for interest rates is 6%. And the requirement on the banks is that the loan must have a 0 interest balance at the end of the deferment period, and the maturity date must extend. So this program wouldn't create balloon payments for you. Your interest wouldn't be accrued. 100% of the interest will be paid by the program during the deferment period. Couple of examples for you to just give you the magnitude. This program is very different than anything else that exists in state government because we're using leverage to maximize the benefit to businesses and to stretch the CARES Act dollars further. An example, Hometown Hotel in Butte, America. For a $69,620 payment from the CARES Act, we're leveraging $129,079 worth of benefit through deferred principal and interest payments for that hotel. A motorsports company, $24,320 worth of payment from CARES Act, levered $34,392 in benefit. A small restaurant in Billings, for an $8,778 CARES Act payment, that business will not have to pay $41,707 for the next 12 months. So you can see that there is a significant leverage point here. Now, how do you qualify for the dollars in the first place? You'll need to be able to demonstrate a 25% loss in net revenue from January 1 to June 30th. There are industries that have made money during the coronavirus epidemic and pandemic. They're not eligible. So we will want you to be able to demonstrate that you have realized a 25% loss in net revenue, top line, and from that, we'll be able to distribute the funds. Our turnaround on applications, assuming everything goes smoothly, is about 3 days. However, we are running into some complications that Bill may want to touch on, but we're troubleshooting those in real time. We only have $47,000 worth of applications outstanding at the current time. We've awarded or will award by next Tuesday $5 million in funds. and our total leverage is $20 million. So we've spent $5 million of our $125 million allocation to get $20 million worth of benefit for Montana businesses. That in a nutshell is the program. We are looking forward to our subscription rates increasing. We very much value our Montana banks and credit unions and lending institutions for partnering with us on this. They've been invaluable, particularly Mr. Bickel, who you'll hear from in just a moment. But if you do have any questions, please get them into the chat. Happy to field those at this time. Thanks, Todd.
Great. Thanks, Dan, for walking us through that. I'd like to introduce Carrie Hagerberg now with the Montana Bankers Association. And we've done a lot of partnering with the Montana Bankers Association over the last few months through this coronavirus crisis. And it's been, I think, a unique partnership that we've got there, is that the banks are businesses and significant part of the business community and local communities. And we've got a lot of the membership. And so we work a lot together to try to address this coronavirus through the banks and the Bankers Association and the Montana Chamber. So with that, I'd like to introduce Carrie Hagerberg, President and CEO of the Montana Bankers Association. Carrie?
Thank you, Todd. Appreciate the introduction. Also want to make sure we thank Dan Villa, the Board of Investments, and the Bullock administration for coming up with a creative program to help not only small businesses, but help banks help their small business customers. I got a call just yesterday from my colleague in Idaho who had heard about this program through an Idaho bank and was inquiring how it was structured and what level of involvement we'd had. And so the program is definitely getting some interest from other states because of its innovative approach. And we just want to really pass on our appreciation for some of the CARES Act funding being allocated to small businesses. When we heard that the state was forming up a program, we asked if we could be engaged, and Dan and his staff have been extremely helpful and cooperative as we've tried to walk through some of the landmines and pitfalls and kind of anticipating some of the questions and issues. So we had a little task force set up that worked with the Board of Investments and with Melanie Hall, the State Banking Commissioner. So just hats off to all the folks who were involved in framing it up. One of those people was our next presenter, Bill Bickel, who is the Chief Credit Officer at Stockman Bank of Montana. He's based in Miles City, which is corporate headquarters for Stockman Bank. Bill also is the current chair of the Montana Bankers Association Board of Directors. Stockman was one of the highest performing PPP lenders in the country during round one when everything was so frantic. And it was largely, I think, due to Bill's efforts to make sure that his staff around the state was prepared, knew how to walk through the application process with small businesses. And Bill's been very engaged working with Dan Villa and his staff in making this program workable for small business owners and for banks. So with that, Bill's going to give an overview of a lender's perspective on what a borrower can anticipate when they approach their banker, what some of the experiences have led to, and maybe just some observations on what to be cognizant of when you're working with your banker or lender. So Bill, welcome, and thanks for all you've done.
Well, thank you, Carrie. I appreciate those kind words. I was raised on a ranch in the country, and the rule there is when the neighbors have a fire, you drop everything and go to help. And I think in many ways since March, the Montana business community, the businessmen and women and the bankers have been in very much the same kind of environment where everybody is working hard to do the best they can. And that's certainly true across the banking sector. and it's also certainly true in the governmental sector as well. And I think what Dan and his staff and the administration have put together here with this federal money is, as you say, a very unique program. I'm not aware of anything like it in the country that provides an important benefit to Montana small business, and particularly those that are in the lodging and hospitality business, the tourism business, that have been very severely impacted by COVID. And what this program provides, excuse me, is a unique opportunity for the businesses to solve their debt service concerns for the next 12 months. Or to put it in another way that I think everybody can probably relate to get their banker off their back for the next 12 months. And that is not only unusual, but it's also extremely valuable. As a banker, I see this as a very powerful tool for the business owner to decrease the cash drain on the business, stretch available resources, and improve the business survivability, particularly if COVID continues to significantly impact business activity, or possibly in the worst case scenario, significantly strengthen as we move into the fall. This extends the runway of survivability for small business that's impacted by COVID. And accordingly, like all bankers in the state, we're working hard to speak to our small business clients regarding this opportunity and to process the applications as they come in. A couple points I will touch on, speaking from the perspective of what, from our experience, business men and women should be prepared to do as they come into the banker. I'll just speak on a couple of quick points and then probably move to questions that are of everyone's interest. The first thing about the program that's important is that the loan is made, or the application rather, is made through the bank that made the original loan. So it's not like it was with PPP with individuals going from bank to bank looking for somebody who can do the application or would do the application. In this particular program, you go to the bank that made the loan, and that bank carries the ball forward on your behalf. Secondly, the application is the business's owner's application. They are the individual and the business making the certification as to the accuracy and the integrity of the application, and those are very important certifications. From the banking perspective, the critical tests that require some information and planning from the customer is, first off, the decline in gross revenue test. Proving that the 25% decline is important. To accomplish that, you need to bring in the revenue for your currently 6 months of 2020, and also your annual or month-by-month revenue for the equivalent period that you have of your last filed tax return. So for example, if you're current on your tax returns and have filed, you would be bringing in 2019 numbers, if not your 2018 numbers. There is a double test here to qualify. Without getting too far into the weeds, you can either use your average monthly performance for 2019 for the first 6 months, let's say, or you can compare actual for the first 6 months, 2019 to 2020. And that would adjust, of course, if you have not yet filed your 2019 tax return. Your local banker can help you with that calculation and can provide you with specific advice. Secondly, speaking from the perspective of customers that all of us as bankers are dealing with, there is the question regarding no reasonable access to 12 months of working capital. To reiterate the point that Dan made so well, we're talking about reasonable access here. You do not have to liquidate your children's college fund to keep your business afloat. And in order to qualify for this program, it's talking about reasonable access. This is not quantified. And one comment certainly bankers have made to me is that this is a conscience test on the behalf of the business. As we know, who receives these loans and how much is going to be public information under the laws of the state of Montana. And really the conscious test boils down to, can I justify while I'm on Main Street or wherever I am that my participation in this program was necessary to take care of my business, my employees, my family, whatever the case may be. Certainly as bankers, we're encouraging our commercial clients to consider this program, and we are encouraging all of our qualified clients to participate in the program. I would stress again, this is a unique opportunity to get the banker off your back for 12 months as we all work through this COVID crisis together. And as Dan also pointed out, the financial leverage here is incredibly significant when you combine the state contribution for interest relief and the banker's contribution to defer 12 months of 6 to 12 months rather of your principal obligation. Finally, I would recommend that you contact and speak with your local banker, the banker that originated your loan, speaking to the bankers who are on the call, and also if as a client you're approaching a banker that is unfamiliar with the program, have them contact either Carrie at the MBA. They can contact myself. We would be glad to spend time with those individuals to increase their familiarity with the program. And also, speaking for myself, we would be glad to share some of our own best practices or what we've learned working with the program through the first couple of iterations, so that a bank doesn't have to reinvent the wheel. With that, I will turn it back to you folks. But again, it's a privilege to participate in this program. I think we're making a difference. I think it's valuable and well worth the time and the investment we all have in it. So thanks again, guys.
Thank you, Bill. And I'll turn it over to Todd, who is the host and can moderate the chat questions and at some point take questions from those who are physically present in the meeting. So Todd, I'll just kick it back over to you. And thanks again, Bill.
Thanks, Carrie, and thanks, Bill. We're starting to get some good questions here, and so we want to get through these questions here. I want to see if Brad Griffin with the Montana Retailers and Restaurant Association, if you want to make a quick comment here, or Stu Doggett with Montana Lodging and Hospitality Association. If either of you would like to make a couple of quick comments here before we start digging into the questions, I'd sure welcome that. Seeing none, we will move along through the questions here. So here was a pretty good one. And Dan, a lot of these are going to be kind of directed in your direction. Bill, don't hesitate if you want to add some additional color to any of the answers that Dan answers, please feel free to jump in. So here's a question related to the EIDL. And this individual received the SBA's EIDL. Are they still qualified for this program?
Yes. So if you received a PPP loan, an EIDL loan, if you're pursuing a Main Street loan or grant, If you received any of the funds from the Montana Department of Commerce or Montana Department of Agriculture or DPHHS that have become available, that does not disqualify you for participation in the loan deferment program.
Right. So here's a question that kind of came up in a couple of different ways, Dan, and it's a question about why this period started on January 1 and then just ends in March. We've got some businesses that are starting to feel like the month of June and July are going to be particularly painful, and they're just wondering about, is there an opportunity to extend this beyond that March deadline, and why was the program started kind of effective January 1 and then ending through March?
Right. So the way that we are gauging, at least initially, the 25% loss in gross revenue, and it is gross. I'm sorry if I misspoke earlier and said net, but gross revenue is we're using your most recent tax returns that have been filed. So tax years January to December. So we use January through whatever the most current complete month. So when the program began, it was January through May. We then rolled over to July 1, extended it to June 30. So we'll continue extending it as the funds aren't spent to zero, and we need to continue to incorporate additional months. Separately, we are doing everything we can to get additional businesses eligible. So to the extent you don't have a 2019 tax record on file, or you haven't filed your 2019s, we'll look at 2018s, we'll look at actuals. If you weren't in business in 2019, we'll work with your bank to use the projections that were used to underwrite the loan in the first place compared to actuals today. So we're doing everything we can to get people eligible and into the program, but still making sure that we protect the integrity, that those who need the money and have realized the losses are the ones who receive the benefit. Bill, do you have anything to add on that side?
Yeah, I'll tag in quickly on 2 points. One, from our experience, we found that the MBOI staff, Dan, Doug Hill, Herb Kulo, which is a name from the past some of us may recognize, have been very accommodating and responsive in addressing particular problems or issues involving particular businesses. The other thing I will add is, like many banks, I'm sure, we have a list of customers who, based upon their performance through June, are right on the bubble of meeting the 25%. We're holding those applications open, intending to retest with our customers once we have July performance. And unfortunately, things being what they are, we think that a number of those clients will qualify. And the ability to keep testing as the economy evolves and as the program moves on is, I think, an important aspect of this program that gives it a lot of flexibility in terms of the individual customer qualifying.
That's encouraging. And so what we're taking from this is that this deadline is just going to continue to move as long as there's money in the program. Is that right, Dan?
Yeah, we're going to keep rolling it. There will come a time when we'll just have to shut it down based on not being able to get the dollars out as we approach, the December timeframe. But from our perspective, I've got $125 million that I'm expected to spend, and we'll do whatever we got to do to spend it, helping Montana businesses.
Great. Did have a question for clarification on whether or not this is a loan or a grant.
So this is a grant, and it is not for the purposes of DOR taxation. It is not taxable income to the business. So if there is any sort of forgiveness by the bank on the loan, then you'll get a 1099 and there'll be some tax implications. But so long as you just participate and receive the loan deferment program grant, there is no tax implications and there's no requirement to repay the deferment funds from the CARES Act.
Here's one that's kind of down in the weeds, but may apply to a number of different businesses. When you've got common ownership, if you've got an individual that owns multiple businesses, do they need to net all of the businesses together, or can they look at it on a business-specific basis for the 25% gross revenue reduction?
So this issue cost Bill and I and Carrie about 10 years of our lives trying to figure out. So let me start at a very high level. I'll take the best stab at it I can and then ask Bill to chime in as well. So many businesses are structured with a holding company and numerous operating entities underneath. The first test is, who is the holder of the note? Who is the actual borrower? Is the real estate holding company the borrower, or is the individual operating company the borrower? If the individual operating companies are the borrowers, then we would look to them to demonstrate the 25% loss. To the extent that the holding company is the borrower, then we would look to them to be able to demonstrate with all of their revenues from their respective operating companies that they have the 25% loss in revenue. If the holding company does receive the program, the benefits of the program, one of the requirements is that the operating company only pay taxes and insurances up for the deferment period. Why is that? Well, there's an opportunity to show a loss, but based on timing of payments from the operating company, there wouldn't really be a loss. So it's a bit convoluted, but in order to get as many businesses qualified as we could and still be able to demonstrate that 25% loss, we look at where the loan originates and who's the holder of that note, and then look at whoever's feeding that business or that holding company from a revenue perspective to demonstrate the losses. Bill, clear as mud?
Very, very clear. I'll add two things. We also have common in particularly the hospitality industry, a structure where you have one corporation that is running the business, and you have a separate corporation that holds much of the debt, which is primarily related to real estate and facilities. In those cases, the borrower, which is the real estate holding company, the company that holds the real estate debt, may not be showing a loss for COVID purposes, but the operating company, which is, for example, running the restaurant, may be showing big losses. In those cases, the entity that holds the real estate can be a qualified borrower based upon the losses occurring in the operating entity. And this interpretation, I think, has been very helpful for a lot of people in the hospitality industry in particular. The final point I would make is this demonstrates again the importance of, as these particular questions come up, getting on the phone either with your banker, and if the banker cannot provide the advice, the MBOI staff to talk through a specific situation. I will say this, and I think this is probably the most important thing. Don't assume that because of your business structure, you're not qualified. Rather, run it up the flagpole and see what the answer is. Because of the amount of flexibility in the program, we have had several borrowers who have been pleasantly surprised, speaking in our personal case, and I'm sure every other banker in the state would probably say the same thing.
That's great, Bill, and I think that's a great reminder that, you know, this is a program that's intended to help businesses. And so as you look at your particular circumstances, right, it's important to kind of see if this is with your banker, working with your banker to see if it applies. And there may be some additional hiccups that you may run into, but I get the sense that Dan is willing to put a good faith effort to addressing some of those sort of issues. So, right, this is intended to help folks out that might need it. So to clarify too, your business has to be based in Montana, but your loan doesn't, right? Your loan could be with an out-of-state bank, like a big bank.
Your loan could be with an out-of-state bank. It could be with a national bank. I will say that to date, Wells Fargo and US Bank have not agreed to participate. They are two approved lenders within BOI, but they are not currently participating. If they are your note holder, I would frankly ask vehemently that they agree to participate. I know Wells Fargo held out on PPP for a long time until they got pressure from customers, and then I think ultimately they did agree to participate. But we've had great cooperation from our Montana-based banks. The nationals have been a struggle, but certainly they are eligible to businesses who have loans with out-of-state banks that are based in Montana are eligible for participation.
Bill is doing a wonderful job of holding his tongue.
Turn the video off, Bill.
No, certainly the Montana banks have worked hard. The national banks, which are members of the MBA, have some special structural issues, and I hope they come along. And regrettably, there's not a lot that our Montana bankers can do to mitigate that situation, although I certainly wish that we could. And lastly, this program is unique because this is not a competitive situation between the various banks. There's no competitive issues such as affected some of the PPP program. And to reiterate the issue or the statement here to certainly to other bankers on the call, if there's anything that Carrie and I can do to help you implement the program, give us a call. Whether you're a member of the MBA or not, doesn't make any difference. Give us a call and we'll be glad to help.
Great, thanks, Bill. And I think the important message there is you need to visit with your local bank and find out if this is something that they've been authorized to be able to participate in. But it looks like a lot of the Montana-based banks will be fine for this. So I've got a question regarding the construction of a new business. I've wondered about this throughout the state as business activity began the first of the year and it was halted as a result of COVID. Is there any part of this program that would apply for the construction of a new business that was halted?
So commercial loans generally are available for participation. As I said, if you weren't in business last calendar year, we'll work with your bank to make sure that we look at the projections that were presented for the underwriting process. Relative to sort of helping new businesses, we're not able to get into that space as of yet. That would require sort of a different program than this, where there's not an opportunity for us to step in and sort of do stopgap financing or any sort of guarantees for businesses that aren't yet open or have not realized that revenue. But to the extent that the business is generating revenue and is able to demonstrate losses on an existing note, that's a place that we can help.
So here's a technical question, and it relates to the question about maybe the banks that aren't authorized for this sort of program. So if you have a loan and you had a loan with, say, a Wells Fargo, just using that as an example, and they're not authorized to be able to participate in this program, but then you refinanced with a Montana bank in March, are you okay for this sort of a program, or does that original note holder, does that clog up the process a little bit?
So we're going to look at who the current note holder is.
Okay.
To the extent you were with someone and now you're no longer with them, we're sort of agnostic to that. We're not going to step between the borrower and the bank. That's not where we belong. We want to work with the bank directly, both to expedite the process, but also to make sure that they have the good customer relations that they need to maintain just from a business perspective. So if you're currently with a Stockman instead of a Wells Fargo, I don't care. We want to help the business.
Great. So I think the big point here again is, talk to your lender. find out if this is something that would work with them. They'll be able to let you know whether or not they're authorized, and you can work with Dan and work through this sort of a program. So here's a question about the CMBS loan through a master servicer. And I'm not familiar with this, Dan, and I don't know if you are, but that was a question if this program could be used for a CMBS loan through a master servicer.
Well, that has not come up yet. So why don't I put that on my to-do list and we'll figure it out. We've gotten a lot of curveballs, but that's a new one. So we'll get on it, and I'll just coordinate with you, Todd, to get the response out to everybody.
Okay, thanks, Dan. So what about loans that were booked in 2020? Will they be eligible if they're no more than 30 days past due on 12/31 of 2019?
So if the borrowers, I mean, I don't really know how that would work. I mean, you can't be late on a loan you didn't have. Although, Bill, maybe you've run into that and I haven't seen it.
We may have snuck one through on you.
Yeah. So to the extent the loan is new in 2020, for that time period, we don't have tax records for. As I said, we'll work with the revenue projections that you and the bank, or that the borrower and the bank used for underwriting the loan itself. But I don't know how the current, I mean, for the purposes of taxation and your obligations to the state of Montana generally, that is something that we would be looking at. A new twist that has come up is folks go in and apply for the program, find they're delinquent. We're giving folks one marker in order to become eligible. So we've had a number of applicants who are deemed ineligible because they owe payroll, they owe property, they owe some form of child support. They owe some obligation to the state. We're giving them an opportunity to become current and then participate in the program. It was a funny anecdote of last week. We had somebody who hadn't filed their taxes in a number of years. They went in to become current to participate in the program. They were owed a refund. So, it's those sorts of things in the one-offs. But we'll do what we can to get people in is the general message.
Right. If an MBOI participating bank refis debt from a non-participant bank, will this borrower debt be eligible?
Yes, we would look at the current note holder. The requirements would be the same, but we would look at the whoever the current bank is.
Well, we've kind of run through the list of questions that I've got. And so I would propose that we get ready to wrap it up. I'll first turn to Bill and see if Bill has any sort of closing comments that he may want to make here today.
Okay, well, thank you. First off, thank you for the opportunity to talk here today and to talk about this program, which, as I've said, I think is very important to so many of the businesses across Montana. And the willingness of the bankers across the state to help support this program as we're best able to do so. And I think that's a recognition of how important this is, not only to the customer, but also to the banker. A lot of work has gone into this. It's very creative and special, and it's been a privilege to be involved. So I would encourage everybody to take a very serious, hard look at this and the benefit it can create for your business, for your employees, and for your community. Thanks again, guys.
Thanks, Bill. Carrie?
Yeah, thanks, Todd and Bill and Dan. It's been a real informative session. I don't know that Dan mentioned their website, investmentmt.com, answers most of the questions. that most people would have. If you don't get your questions answered, obviously contact me or Dan in particular, so we can get those questions answered. I want to thank Brad Griffin and Stu Doggett, who were very instrumental in helping shape up some of the questions that have come up and working with their respective memberships. And so it's been an informative hour, and thanks for everyone's participation.
Dan Villa, thank you so much for your time. If you've got any closing comments that you might want to impart with us?
Really just a thank you to everyone. I look forward to working with you and your lenders to get as many Montana businesses in the program as we can. We've got $120 million that we need to get out to Montana businesses. So looking forward to working with all of you. It's a very rare instance when we get to have a win-win-win. This program will present a win for the bankers, that assets that may otherwise show up distressed and challenge their balance sheets. We can provide relief on that front, get to work with the borrowers to make sure that their businesses can be successful, and the state's economy will benefit the more businesses and jobs we can protect throughout this. So we're here to help. I know that sounds like a Reaganism, but certainly BOI and all of your participating banks are ready to meet the challenges and help you through this.
Thanks again, Dan. We will have the recorded version of this up on our website. We'll make sure that we have it distributed to Carrie at the Montana Bankers and Brad Griffin at the Retailers and Restaurant Association and Stu Doggett at the Lodging and Hospitality Association, so they can post it there and share it with those that might be interested in this program but could not participate in today's program. So thanks once again for all of you and for participating in this webinar today, and be safe, and we'll see you on the next one.